Okay, guys, thanks for joining us here in the charts. This is the Market Beast, Napoleon Macro. We're taking a look at Rost Stores, Inc. We have a potential move incoming. I'm going to explain to everyone exactly what I'm looking for in the charts. I'm going to give you a time frame, the targets, and that's what we're going to go over. So welcome back, loyal family. If you're new here, we explore price action via candlesticks and lines. Welcome in new subscribers. Let's go ahead and dive into exactly what I'm looking at in the charts here. Shall we? So today's September the 16th, 2021, and the previous close of Rost is going to be at $112.91, slightly positive close, 0.4% for the day. A little bit more interest coming in the pre-market, $112.92, 0.01% up for the pre-market. Okay. All right, guys. So this is very strategic. So follow along with me here, if you may, if you don't mind. All right. So yes, we're actually looking to bet against the Rost market. I think we have identified a head and shoulders pattern. The left shoulder here, the head, the right shoulder. According to the volume, it is a legitimate pattern. Well, it's close enough for government work. What you want to look for is most of the volume should take place in the left shoulder, and I guess it can also lead into the head as well. But technically speaking, it should be most in the left shoulder, and it should start to gradually go down in the volume as it makes its way in the head and the right shoulder. And if you're looking at the bottom of the screen right there, I'll show you that it is a declining, kind of a declining effect on that volume, if you can see that. Okay, so it is technically a head and shoulders pattern. Now, will it play out to perfection and meet the actual target, $97? Of course, time will let us know that. So let's allow the markets to play out, and we'll know in due time. So some of the reasons, I guess I'll go over exactly how I'll play this, and then I'll get more into details as far as why I'm entering the market. So I mean, obvious reason it's a bearish pattern, but here's the blueprint, guys. My ideal entry would be $121. So if we get a nice little push to the upside at 121, in fact, let me just go ahead and set an alert for that level right now. That's my ideal entry. So I'm actually not in the market right now. I'm always calculating my steps. Put a little alert there. Ideal entry, ideal exit, $97. And this should happen over the course of the next 3 months, I want to say. Okay, remember my time is always conservative. Maybe it'll happen in less time. Maybe it won't happen at all. Okay, but this is what I'm looking for in the charts in order to enter, to feel comfortable betting against Rost. Remember, this is a counter trend play. It's in an overall uptrend. So if you think of exercising your right to listen to this video and entertain a position, just know that you are betting against the tide. Okay, that's not safe. All right, so please have a very strategic entry. So that's the blueprint, guys. You're gonna have everything 3 months entry to 121. If I see if it moves higher, and if I can identify reversal candles near 121, 3-day or weekly reversal candles near that level, then I would feel comfortable entering betting against the market. So that's very specific. If it goes up to 121 and it breaks through it and Napoleon got it wrong, no, guys, I'm looking for very specific details. So please be sure to look for those in your charts on your end as well. Okay, I don't just start blindly hitting the sell or buy button. I'm looking for things in the charts. Okay. So that's everything. That's kind of the blueprint. So the reason why I'm entering. So for the first reason, I think it's pretty obvious. This is a bearish pattern. But going into a little bit more details, elaborating as far as why. If you like, put an extended neckline somewhere right around here. Let's just assume that the market does get a small bounce or an aggressive bounce. I'm not sure if it can break through. Okay. If it gets like a bounce from the current level up to 121, it kind of aligns with that neckline. You see that yellow line that I put on the chart there? So let's just say it actually extends over until like November, in the beginning or the middle of November, and we're getting a nice push to the upside. really nice green day. Everyone's getting excited. Yeah, it's likely I'll be looking for a really nice position right there. If it gets rejected, and of course the market just continues to potentially roll over, and get a lot of the interested buyers trapped in the level at about 121. So that's one reason, the neckline of the head and shoulders pattern. The second reason, or not in any particular order, another reason is because if I actually get in here and do my Fibonacci retracement levels, and I measure from the most recent swing high and measure it onto the most recent swing low, if this is the local low here and it's going to move higher, okay, I'm not sure, but if it is, it actually aligns with the 0.618. If you do something like that, it aligns perfect. You see that? Perfect with the 121 level. 121 and 32 cents. Okay, that's this another reason why I'm interested in betting against the market. And again, it all changes if the market blasts through. Okay, but at least we have a calculated idea of what we're looking for in order to position. Not ourselves, pardon me, I didn't mean to say that. But at least I have a calculated reason or what I'm looking for in order to enter the market. It's very calculated and strategic. Okay. And even if it like wicks higher, this doesn't mean like it'll go to 121 and just kind of completely fail. No, because remember, you have weekly and 3-day candles, which is, again, what I'm looking for. So let's just say you get a bounce and it moves higher and it starts to poke through like it's 121 and there's like still like 3 remaining days to close an active weekly candle, and it's trying to proceed higher, but I look at the lower time frames as well, guys. So I do pull up like the 1 hour candles. I just don't show it on the chart on the channel, but I look for a weakness in the lower time frame just above my ideal or below my ideal entry. In this case, it's above, just to see if I can see reversal candles. And of course, that gives me a better idea of whether or not there will likely be a reversal within the time remaining in that particular candle, if that makes sense. So the weekly candle, if there's 3 days left and I'm noticing some, lower time frame reversal starting to develop, and at that moment, I would make a decision as to whether or not I want to start to enter on a green day betting against the market. Okay. So that is, those are the reasons why, guys. Yeah, I guess those are kind of the 3 reasons: the bearish pattern, the neckline, a potential rejection from the neckline, and also it's near the 0.618.